What's up, traders? Welcome to this daily trade recap. So we had a profitable day today. We took two trades. We took a long opportunity and we took a short. We're going to break down those two trades and talk about it and exactly what I was looking at. Now, we're going to start off with the bias and kind of the areas we were looking at the start of this morning. So we have a lot of liquidity being built on top of us, right? A lot of liquidity being built at all-time highs, which is good. I want us to actually leave away from that since we've just been at around all-time highs for the longest. All-time highs is not the best conditions for my system. I already know that. So I'm more careful around all-time highs, right? But essentially what I was looking for today was a manipulation higher and then for us to short down into this gap right here that we have still on NQ, this new day opening gap here. And then we also had Asian lows right here as well. So this was going to be the most optimal area to look for a opportunity to long if we did not get a short opportunity into this area, right? So initially we were looking for shorts somewhere here. Now, prior to the market open, we had a last minute liquidity being formed, and I'll show you guys that. But as you can see right here, there was nothing there when I did my market bias, but I will show you guys what ended up like forming here and why we were able to take a short and why we were able to take a premature long as well, as you're going to see. All right. So let's go to MNQ here. You guys can see the executions on the first trade that we took right here. So here was our first trade off this long, and then we ended up getting edged by like a couple of points, unfortunately. Now, this definitely is a full take profit trade. Yeah. So off the perfect entry for this trade, this is a full take profit trade. But when I executed, my got filled a little bit higher off of this candle. So I did not get that full 1 to 2, right? Which was like a little bit above here, and it was because of that slightly late execution off of here. But it just goes to show you how important it is to execute on time when you're taking your trades, right? But it was okay. Stuff like that happens. It's gonna happen more than once, so we don't complain about stuff like that. We just look for the next opportunity, which we did right here. Now I'm gonna go to NQ. Just wanted to show you guys the executions of the trades. We took the first long and then we took the second one here. So we're gonna go to NQ and we're gonna talk about it, right? The first trade came off of this 15-minute intermediate low. So go here on the 15-minute and let's go right before the market opened. Boom. So right before that 9:30 candle, you guys can see we had this fresh 15-minute right here. So we had this fresh 15-minute candle, this whole candle here, which traded into this 15-minute gap. And then we had this wick trade into this 15-minute gap, right? Both of these areas, that low and this high becomes an intermediate high and intermediate low because we are respecting a gap, right? It's a low level liquidity, but it's still a liquidity. Okay. It's not as high probability as previous day highs, data highs, session highs, and everything like this, but it is still considered liquidity, part of my system. So I am still able to take trades from there if they are a plus off of these 15-minute intermediate highs and lows, 30-minute intermediate highs and lows. And then once we get to the higher time frame, like 1 hour intermediate highs and lows and 4 hour, those are more higher probability. But I just wanted to show you guys that this candle here and the fact that it happened right before the market open is also important too. If this would have happened during market open, then that would have been a completely different story. I don't take liquidity that's forming during market open. We only look for pre-market open liquidity areas. All right. But as you guys can see here, I'm gonna play it forward a little bit. Essentially what we had was we had the market open here. Boom. And we got this aggressive push towards the downside. Now, aggressive push towards the downside underneath this 15-minute intermediate low, right? And if we go to ES here, that same 15-minute right here, you guys can see that same 15-minute low, boom, did not get swept, as you can see. Low to this low, we did not sweep that low. And then we go back to NQ, and we can see low, and we swept this low. So that is a bullish divergence here. That means that right now the Nasdaq is manipulating, and that the ES is the leader, okay, and that the ES is stronger. So technically, it would have been better to take a trade off of the S&P, but I don't trade the S&P. So that's that, right? I don't trade the S&P, so I only execute off of NQ. But it's good to see that there's a divergence there. It gives us a bullish divergence, meaning that this is a manipulation, and it's basically telling us, hey, if we get a reversal opportunity, and that reversal opportunity looks like this, where we get another candle here, you can see it's one candle that equally invalidates that bearish order flow created by this candle, right? That shows an A plus setup, which is a reversal. It confirms all the rules that we have to the right. The entry is near the sweep. It's the highest time frame inversion. It is an obvious V shape. We have SMT and liquidity. We have a clean displacement with this candle. Do we have room to target? Yes, we do. We have liquidity points above here. We have plenty of room to target, right? So that, go ahead and confirm that trade. Very nice trade there off of that first one. Unfortunately, it was a break even, but it is what it is, right? So boom, long came off somewhere right here. Stop loss was underneath this candle, and take profit was a 1 to 2 right there. So once we ended up missing this trade, not missing this trade, but once we ended up getting break even right here, we got break even on this wick right here. My next immediate thought was this 15-minute intermediate high. So this was the next area we were looking at, because this was our next liquidity level. And you can see the market actually went above this liquidity, but we didn't deliver from this liquidity. Now, when we created this move, I honestly was kind of like turned off about this area. I wasn't thinking that we were going to do anything, because I wasn't expecting this. If it wasn't because of a move like this and we had this violent move towards the downside, most likely I wouldn't have taken the short. But it's because I knew that we were already above this 15-minute intermediate high, and we have reasons, according to our bias as well, we have valid reasons to come lower, that I knew that, hey, okay, if the market ends up giving this inversion of all of this here, most likely than not, we're not going to continue higher, right? It's a lower probability that we continue higher if we inverse all of this bullish price action right here, okay? And essentially the highest time frame inversion of this was on the 5-minute right here. So this is what I executed off of, was this 5-minute gap. Boom. Once I seen this 5-minute gap get inverse, we have nothing else left to invalidate us. We don't have any more 5 minutes. We don't have a 15-minute. We don't have anything here to invalidate us, right? And we have this wick, and then we have this liquidity point, and then we have this gap underneath us. So all of that gave me reasonings to take the short, and also my bias prior to that as well. I was already looking for a move higher and then for us to go lower. So once I seen that 5-minute inversion, we confirmed that trade and we executed that trade there. Stop loss was at the wick of the candle. Okay, and this is why we have the same stop loss for every single trade. Always goes above the wick, no matter how long the wick is, as long as it's not too long, but it goes above the wick, right? And you can see that this trade did stall at first, and to be honest, I was ready to accept the loss here, because mainly I would have looked for more opportunities to short at like London highs or this 15-minute intermediate high there. But luckily, we did not get stopped out on this. You guys can see we got very close right here, and stop loss was like right there. Let me see. Yeah, stop loss like right above this wick. Got very close, and the trade ended up playing out, right? And those were the two trades that I took this morning. Honestly, very simple, very straight to the point. So I hope you guys were able to get into at least one of these trades, at least the first one. This one was pretty obvious. Okay, I feel like this is a little bit more advanced if you actually know your system and you know what you're doing. That one, I don't think a lot of people were a part of these shorts, but I know a lot of people were a part of these longs. Okay, and honestly, guys, if I would have hit take profit on this first long, I would have been done trading for the day. I only take one trade. If that first trade wins, then I'm done for the day. So yeah, that's kind of wraps up my day. Good trading day. Honestly, I'm glad that we are coming lower and that we're coming more towards the downside. I would love to get away from all-time highs as much as possible, generate more liquidity, and just for us to come lower and fill up a lot of these imbalances, if this will load up, fill up a lot of these imbalances underneath us and just give us that nice retracement. We just have so much liquidity, and this is hurting my eyes even looking at this. Probably gonna have to delete a lot of this areas, but yeah, that is pretty much it for my market. Well, for my trade recap of the day. If you guys have any suggestions or if you have any questions on why I ended up taking the trades that I took, let me know down below. I will see you guys in the next one. Peace out.